In this video, I'm going to be talking about a simple trading strategy that I believe personally may be the best way to grow small accounts, or at least in my view, it is my favorite strategy for growing smaller accounts. Now, don't get me wrong, this strategy can be used on larger accounts as well. It is something that I personally use, and you may have seen it in a lot of my different videos. So what I'm going to be doing is I'm going to be revealing the strategy that I use in a lot of my different trade setups that you may have seen on the channel. In fact, I'm going to go one further, and I actually made a video, I'll pop up the thumbnail on the screen right now, of an account that I basically grew using this exact strategy just by using some simple concepts over and over and kind of sticking to this plan. Now, as we go into this, I do want to say that the number one thing that we talk about is that all new traders, I don't care, at least in my case, I was one of these people, and a lot of the people that I've ever talked to about trading who are beginners, right? They always want to make that big money. They want to find ways to grow their account very quick. Naturally, that is something that we all want to do as we get into trading, is we want to figure out how can we turn this money into more as fast as we possibly can. And I don't think that that necessarily is a bad thought process, but I think that what we need to learn before we get too far into the technicals of the strategy is that the step number one to actually creating more money in the markets is to first not grow your money, but to actually protect from it, or protect the money that we deposit into the market from the attacks that the market inevitably will throw at us. So I think that that is going to be what's the central piece to this strategy. Is we need to talk about risk management. We need to find ways to stop our account from getting destroyed from the attacks that the market, again, will inevitably throw at us. So how can we do that, and what kind of strategy can we implement that allows us to limit our risk but not limit our upside? I'm going to say that again. This strategy, the coolest thing about it is that it limits, if we stick to the plan, it limits the downside risk that we can take on any particular trade, but it does not limit the potential upside, meaning that our down can only be some amount of money if we stick to a plan, but our upside could be huge just from this simple strategy. And that is possibly my favorite component to this trading style. So let's go ahead and get into it. Before we get too far, my name is Nick. I talk all about trading and investing here. Do me a favor, if you are interested in this sort of content and you want to see more of it, subscribe to the channel and help me out by hitting that like button. It helps with the YouTube algorithm to show that this video is worth watching to you and maybe to others. So let's go ahead and get into it right now. All right, so let's go ahead and get started with this concept. So I mentioned first that the first thing we need to talk about is risk management, and I'm going to keep it really simple. So for the beginners out there, generally speaking, what I'm going to be talking about is risking no more than 1% of the account per trade. And I know you've heard this because it's a very common statement, you should only risk 1%. And if you haven't, this is a really great rule in my view for risking a small amount of capital per trade, which is very, very key in keeping this account on a relatively low drawdown. We don't want to be making this account, if we have $500 in an account, for example, we really don't want to see this thing go down to $200, because then what happens? Well, we have to double our money and more just to get back to where we started. This is a really, really bad approach in my view. So the best thing we want to do, or in my view, the best thing that we can do, is we can limit our initial risk by keeping our stops or our trades at a 1% risk, max risk of capital, okay? So with that said, if we're only risking 1%, well, how much percent are we going for? Well, again, as I mentioned earlier in this video, the coolest thing is that the upside potential is much more than the risk on any particular trade. So let's go ahead and get into this concept. So the first thing that we're going to be looking for with this strategy is, in fact, we are going to be identifying trends, okay? A lot of times, new traders try and fight the trend. They say, oh, this market has gone up quite a bit, it's got to come down, right? And sometimes it does, but a lot of times the market continues to trend in a particular direction, and a lot of the profits that can be made, even for new traders, are actually going with the trend in my view here with this strategy, keeping it simple. We're going to be looking to go with the trend. Now I've got a daily chart pulled up here, but we really can pull up any time frame. And maybe for this, we'll talk about the 1 hour chart because I think we can keep it really simple with that. Now, all we're going to be looking for in this concept is we're going to be looking for the trend first. We need to identify a good solid trend for us to actually get some good setups. Why? Well, the trend is really the basis for a lot of the big profits that can occur in the foreign exchange, stock market, whatever you're trading. It's important that we catch some sort of nice move in order for us to make the profits that we're looking to make, right? It makes sense. If we want to catch some big moves, we need to find some good trends to ride and to take as much as we can from in terms of our initial risk and then our potential reward. So let's go ahead and talk about identifying trends. So there's a couple different ways that you can do it. I like using moving averages, as simple and, maybe as laughable for some people as moving averages are. I really like them just for a simple concept of catching or directing us which way the market is going. You don't necessarily need this. A lot of times people say, well, I can just look at a chart and know which way the trend is, right? Clearly the market's going down in this, clearly the market's kind of going sideways, and now we're looking to go up, right? And so when we identify the trend, you can do it however you want, but for me, I like using something like a 200 period moving average. It's a slow lagging moving average that kind of gives us an overall direction of the market. Now, if price obviously is trading above that 200 period moving average, that's considered a bullish uptrend, right? And then if price is moving underneath it, that's considered a downtrend market. Simple enough. So when we're looking at this, the idea here is, again, we need to identify a trend first. Now, there's another saying that I really, really like, and it's basically another concept for trend following. So every great trend starts with a breakout, okay? To every great trend, it starts with a breakout. Now, what does this mean? Well, very simply, what it means is that for every market that starts trending, whether it goes up or it goes down or it goes anywhere, right? If it's going to move, it's got to, at one point or another, break through significant levels of support and resistance. If you aren't familiar with support and resistance, this is a very simple concept. It is basically a level on the chart where price finds supply or demand. For example, right, as we come up here, this level here became a resistance point because as price comes up, it basically shoots back down, shoots back down, shoots back down. This is showing selling pressure as sellers are basically saying, no, this market is not worth this price up here. Sell it every time it comes up, and they're making their money trying to sell into that market. Now, when we talk about a breakout, we're actually talking about this failing, right? I know it sounds sinister or evil or whatever, but we're looking for failure here from sellers to hold this market down. And that, my friends, is basically what we're looking for in terms of a breakout, okay? And so when we're looking for a breakout, again, a breakout is the start to every great trend. To every great trend that there ever has been, there has been a significant breakout at one point or another. Think about, for example, Apple stock. The ticker is AAPL. Apple has been going up and up and up and up. I actually own Apple, thank goodness, because it is a really, really great company in my view, and its long-term has been an incredible market performer. It's outperformed the stock market by leaps and bounds. And simply put, some of the biggest moves in Apple have just come from the simplest breakouts, right? Even things like breaking above the 200-day moving average has been an actually pretty good indicator in catching some of those crazy good trends on Apple. So when we're looking at charts, when we're looking at, for example, we're looking at the pound dollar on the 1 hour chart, when we're looking at those great big trends that start, they happen to start with a key break of support or resistance. Now, we can be trading to the downside or to the upside in the foreign exchange market, which is really cool. We can short or we can be long, which is nice because you can catch moves either direction. But when we're talking about a big move, again, we're looking for that key break. So the best way for me to identify a key break is to start by identifying key levels of support and resistance. So after we've identified, okay, this market is trending up overall, then we want to also identify some key levels of support and resistance. And now what we're going to do is we're going to sit on our hands. The next step is to be patient and to wait for that breakout. We're going to wait for it. We're going to look for it. We're going to be tracking these markets. We're going to be looking at whether you're looking at the pound dollar or the euro dollar or Apple stock or whatever. We're going to be looking at those markets that we want to trade, whether, whatever markets you are interested in trading. watching for key breakouts, looking for high, strong levels of resistance to be broken if we're buying, and key strong levels of support to break if we're going to be going short, right? Now, once we know that a market has formed a significant level of resistance and we've come into contact with it and we've actually broken up, what do we do from there? Again, every great trend starts with a breakout, so we want to be looking to get long in the most organized and the most consistent way that we can catch some of that move. So there's a couple different ways that we can do it, but there's my favorite way is the simple break and retest. We've talked about this concept again and again on the channel because it is one of my favorite entries. It's so simple that it just might work. Basically what we're looking for is, again, that key level of resistance to break, but then we're looking for the retest. And this happens more often than you might think. Looking for a market to break out of a range and then retest a significant level of support or resistance. Why is this happening? Well, it's because, again, buyers just broke out. A lot of times we get some profit taking, right? People taking their money off the table. They say, oh man, I've made a nice trade. And then they sell off and that causes the market to go back down. Well, this is where a lot of times some of the big moves can be caught, because this point is where we can be looking to potentially jump into a trade on the long side in favor of that uptrend. Now, why would we want to be entering at this point? Well, it actually gives us a better probability of potentially finding a good setup. And here's what I mean by that. So if we're going to enter on the pullback after that key break above resistance, we're entering in at a lower price. You've heard the saying, I'm sure, buy low, sell high. Everybody knows that one. Now, why is that important? Well, because when we buy lower, when we buy at this key level, we're saying that, okay, buyers broke out of this level. There's a good chance they want to hold this level and continue that push that they initially made, right? It's kind of like the market's moving in waves. We're waving, we're pushing and trending up. And this is kind of okay, we've given back a little bit. This might be the chance to jump in on the rebound, and bam, it keeps going. So that is the concept. That is a simple entry. So the entry, again, doesn't get too complicated. All we're looking for is we're more so, rather than looking for the perfect entry, we're more so looking for signs of strength, signs of trending nature to continue. Now, here's where things get a little bit more interesting. I mentioned that my favorite way of trading this strategy is to risk small and have basically limitless reward. Okay, this is the key component in my view of growing a smaller account. We're going to be risking small amounts on that account to potentially have limitless reward. Now, how are we going to do that? Well, if we look at this, we can break this down very simply just by looking at these two components. If we want to have small risk, we need to put in this case, small lot size, yes. We want to have small lot size, again, risking 1%. But we also want to put a stop loss on our trade that risks about 1%. Okay, if we're going to be trading this sort of strategy. So we're risking 1% here on the account with a stop. Now, where do we put our stop? Well, this is where it's going to come into your technical analysis. We've got this key level of support. I would say that a fair stop loss would be underneath that moving average, as well as just a little bit away from that supportive level. We want to give the trade a little bit of room to run, a little bit of room to breathe, and then basically put our stop there. So then that second component was the reward, right? We want to have unlimited reward. So how do we do that? Well, if we put a target on this trade, do we limit the reward? Yes, we do, right? It's not that having a take profit is bad, because a lot of times people have take profits just fine. And again, that's going to be up to you if you'd like to put a take profit on your own trades. At the end of the day, do what you want with your own money. But what I'm saying here is that if we're going to have limitless potential upside, I'm taking off the target on this trade. I'm going to completely not say I'm going to take profit here, because look, some of those big trends, they keep going. And if we're going to really catch those big moves, we don't want to limit our upside. Okay. And this is, again, just the way I trade this strategy personally. I have a smaller account that I've been trading this on, but also on one of my larger accounts, I trade this concept with no take profit. So I enter into the market and I say, you know what? I'm going to catch a really big, nice move on this trade, or I'm just going to stop out. And let me be honest with you guys, a lot of times you're going to stop out. That is the nature of a strategy like this. When you have upside potential that is pretty much unlimited, you have a lot of times what happens is you get something like this. You have something like this, right? You have something like this. You have something like this. This is going to happen. The reality, though, is that some of the biggest winners will just run and run and run. They may not be frequent. This is not going to be every time. I wish it was. I would just, it'd be the easiest way to make money in the whole world is you just take this trade every day and it just runs all the time and you make millions. We'd all be millionaires calling each other up from our mansions. But the reality is that it's not that easy. So when we're looking at this and we risk 1% on this trade, how do we potentially cash out of this trade? So we see this big trend running, but how do we cash out? Well, this is where I'm going to be employing trailing stops. And this is how I trade this strategy is I basically say, okay, here is my initial risk. Okay, I'm gonna mark out this distance here with this little rectangle. I don't know if this is gonna work, but we're gonna try it. So this is my initial risk, right? And as this trade either stops me out, if it stops me out, then I just close out of the trade. You know what? No worries. I'm just going to look for a new setup and I'll retry, find another entry that works out better. No big deal. That's the mindset that you've got to have with this. Again, you're risking only 1%, so it's not like it's going to kill you if you're just risking small percents. It's not going to be the end of the world if we stop out, but the potential upside is huge. So what do? Well, if the trade goes in our favor, here's what I'm going to be doing. So I am basically going to take this distance, and every time that it starts moving in my favor by this same distance, I would call this 1R. If we had another move, right? If we were to continue moving, which we see in this case, I would call this 2R, and so on and so forth. So what I mean by that is as this trend continues to move in my favor, I am going to be trailing in my stop. So here's how we would do it. As this trade moves up, when it gets to 1R, I'm gonna move this trade to break even. So I'm actually gonna take my stop and I'm gonna remove it from here and I'm gonna bring it right up to this point. I've broken even on the trade. If it decides to come back, no worries. I just stop out of the trade, break even, we move on. If it continues, the next time once we hit 2R, I'm gonna move my stop up to 1R locked in. That means I've locked in 1 times my initial risk. So if I was risking $100 here, then I've locked in $100 of profit after we hit that 2R. We keep going. As we hit that 3R mark, I'll basically lock in 2R, right? You see how I'm just walking it up, keeping it really, really simple. So at this point, I've locked in $200 of profit. And you can see it would happen again. We hit that 4R, we lock in 3R, and so on and so forth. In this case, I'm not exactly sure what it came out to be, but this case looked like it may have actually been something like a 6 or even 7R, maybe 5, 6, 7R on this trade. We probably got stopped out on this one as prices came back. And that's where you would have gotten out of the trade. So the cool thing here is that in the end, this trade ran and ran and ran in our favor, and we didn't stop the trade just because it came up just to here and we took profit. What we say by this is we said, okay, every great trend starts with a break, and I'm gonna look to get in as best I possibly can with the best risk to reward and basically say, okay, I'm risking a small amount. If it stops out, not gonna kill me, but if it goes in my favor, this is where I'm gonna cash in. This is where I'm gonna look to make profits. And that's how I trade this strategy. I keep it so simple. All I'm looking for is key structural breaks to the up or downside, and I'm looking to ride the market as much as it wants to go. And the cool thing, guys, is every once in a while, you're gonna get these monster trends. And this is where the real profits come with this strategy. Again, when the market is sideways, that's not gonna be the best thing. Obviously, that's not gonna be fun. You might get stopped out. That's part of the game. That's part of the reality of trading. but I'm looking for the market that's starting to trend. I'm looking for a key break underneath or above structure. I'm looking to join into that move on the key breakout or maybe even the retest, either one. Really up to you how you like to trade that. I encourage you to take time to go test this concept, to go try it out for yourself on a demo account. Don't go doing this on a live account until you feel comfortable. If that's a decision you choose to make, by all means. But what I'm saying is try this out on a demo account. Go test it in your back testing. Go try this. The other secret to this trading strategy is that just like any trading strategy, you need to go put in the time. Because just because a guy on YouTube like me shares a video about this concept, it doesn't mean that it's gonna just all of a sudden be a perfect answer for you. You have to go put in the time just like anything else. Just because somebody teaches you some principles of starting your own business does not mean that you can just go take those and cookie cutter start your own business. You've got to go take the time to test out those concepts, to try things, to fail in things, and to learn from that failure. Guys, I hope that you got something out of this video. Again, please share it with a friend if you got something out of it, and also like the video down below. And you can also subscribe if you are new around here. You can watch more free trading content. I share tips, tricks, and I share my own trading live for people to see. If you're not already a member of our community, you can find out links. There's a link in the description to find out more information about our group. You can come chat with us and trade alongside myself, where a lot of times I am trading this strategy. So maybe we'll see some of you guys in there. Thanks so much for watching. I hope that you have a fantastic rest of your day, and we'll see you back in the next video.